For more on the market rally and what to expect in Q2, let's bring in Wall Street bull Venu Krishna, Barclay's head of U.S. equity strategy and global equity-linked strategies. Venu, great to have you with us. What did you make of the action today?
It all depends on what you think about the war situation. And clearly today the news was good. But I recognize that it all depends on the next tweet and to what's going to happen. But clearly, the single biggest overhang in the market is for how long this crisis lasts, and then what is the sort of, when you come out of it, what are the implications? So I think, broadly speaking, our view is that in the history of geopolitical risks over the last 10, 15 years has been that most of it has been generally contained geographically, and it's normalized relatively soon. So I think you can argue that the market has been somewhat pampered to follow that view. And already the Middle East crisis is broader in terms of Saudi Arabia, Oman, Bahrain, Kuwait, the list goes on. But I think the view is that there will be a resolution, and that's our base case. And that's why we have approached it from a scenario analysis standpoint. So if things will go wrong, we have a downside case of 5,900 for the S&P. But we raised our price target, and we raised our earnings estimate last week. And that's why we're getting all the attention.
So let's just say it ends. Let's say it's the best case scenario. It ends tomorrow. The strait is open. There's no tolls and nothing. Everything goes back to the way it was, except that maybe oil prices remain high for some. Is that the scenario that gets you to your new higher EPS and price target estimates on the S&P 500?
Yeah, at the core of it, I think the view is that the U.S. economy is a lot more immune to this crisis compared to the rest of the world. Asia is the most exposed. So is Europe to a great extent. But U.S. as a net energy exporter is in pretty good shape.
But if 20% of S&P earnings come from overseas, can we really be immune? If those earnings are in question in any way because of higher oil prices, because those economies are much more impacted?
Sure. The question is, how high is the oil level you're talking about? 85 to 100, we think the U.S. economy can absorb. It'll make some impact on consumption. And in fact, in getting to our 76.50, we do assume that consumption declines, and we do assume that global economic growth takes a hit. But we also assume that the U.S. economy is going to be relatively more resilient. And that's how we get to those numbers. Part of the reason is, one of the most interesting facts we see right now is for the first time in ages, at this point in time, normally the earnings revisions go down about 150 basis points. Right now, it's up 400 basis points. That's a 550 basis point delta, in good part driven by the part of the market which has derated the fastest,